Hello my fellow traders, this is Martin Jansen from Trade It Simple, and today, as every start of the year, I'm going to talk about the potential moves for all the majors over the course of 2016. Let's start with Euro-Dollar. On the weekly chart, we can see that after testing the support of this massive falling channel formation, the rate was stuck in a consolidation mode for the whole 2015. Although we are already trading at the floor, as I have mentioned before, I really believe we can trade even lower. I'm looking at this as a bear flag formation, with the flagpole being the whole move down from 140 and the whole last year's consolidation as a flag. That gives us two main targets, the 61.8 and 100% breakout targets at 94.60 and 82.30 accordingly. On the upside, the line in the sand for me is this level here at 115.50. If the rate can close above this one, it would trigger a double bottom scenario and we could start looking for a move higher and a possible test to the channel's upper boundary. Of course, this is less likely because of the fundamental differences between the two central banks, with the Fed looking for the next rate hike and the ECB to extend/enlarge their QE program. From a short-term perspective, on the 4-hour chart we can see that the rate has broken this head and shoulders pattern and looks like it's heading down to test these lows once again, in which case it would be another indication for the downside pressure, as triple bottoms are much less likely than flags. Okay, the pound dollar. The weekly chart shows the rate is testing this huge rising wedge floor. As I have mentioned a lot of times before, I believe this pair is more prone for a reversal, not a downside continuation. I would be looking for a buying opportunity and target at least the last year's high around 160. And if it can push through that one, the upper boundary of the wedge formation, somewhere around 172 area. For any downside continuation, the rate needs to break 146.70. This would open up a way towards the major psychological support at 140 and the all-time lows around 135. Alright, let's move on. The Aussie dollar. It has been stuck in a symmetrical triangle formation. My bias is still with the preceding trend, therefore I'm looking for a downside break. If we see a break below 070, it would open up a way towards the 100% breakout target around 065. But to be honest, a strong move below the 2015 low, below 069, and I would be targeting the next major psychological level at 060. For any upside targets, the rate needs to break above the former support at 075.50, and that would open up a way towards 080. But to scale in to some serious long position, I would first need to see a break of this major falling trendline resistance, and I don't really think we can do that within 2016. The Kiwi dollar. It's currently bouncing lower from this year-and-a-half falling trendline resistance. I am definitely short here as long as we are trading below the 69 level. And for the target, I'm looking for the 2015 lows around 62. And if we see a continued weakness, a possible test to this 15-year rising trendline support around 58. If the rate breaks to the upside, the 69 level, it will be interesting to see what the rate will do at this former support new resistance at 72. And if it breaks that, I would be targeting this major level at 77. Next one, the Euro Pound. Similarly as last year, it is trading within a symmetrical triangle formation, and I'm looking for a downside break, in which case I would be targeting the potential 100% breakout target around 63.50 level. Again, I'm not really looking to buy euro against any currency. However, if the rate managed to break above the 75 level, it would invalidate my immediate bearish outlook, as it would signal about more serious retracement higher. Okay, the last one, Pound Kiwi. After a tremendous rally, the rate was retracing back lower and is now bouncing back from this massive gap area. This feels very bullish to me, especially because we finally broke this massive 4-year inverse head and shoulders pattern, and this is also the former resistance coming in as the new support. I will be targeting at least the highs at 250, but considering how volatile this pair is, it wouldn't surprise me at all if it reached the 275 mark within 2016. Alright, that's it for me today. I would just like to remind you about our New Year's sale. This week only we offer 59 euros of our Traded Simple Signal Service yearly plan. You can click on the card around here to check it out. Also, don't forget to subscribe to our channel and hit the share button. Good luck with your trading and see you soon.